All right, happy PPI day. It's 8:12. We'll start at 8:15. There's an opportunity for you to reload your coffee, do what needs to get done. So I will see you in 3 minutes, and then we will prepare for PPI, which only allows us to guess what CPI will be tomorrow, which only allows us to guess what FOMC is going to do next week on Wednesday. Aha, that's a lot of guessing. Yeah, so let's get on with it, huh? Unusual indicators that could reveal the state of the economy. Crypto today. Bitcoin reclaims $112,000. Ethereum and XRP midweek rebound. Brazil IPCA inflation came in at 0.11%, above expectations, 0.15% in August.
Investing live European markets wrap. Gold stays bid, currencies muted. US PPI up next.
Euro, chart US dollar, consolidates losses with markets awaiting US inflation figures. Pound sterling wobbles against US dollar. Investors await US PPI data. Kiwi dollar, chart US, dollar price. Forecast aims to extend upside towards 0.6001.
Iran says more talks needed to bring about IEA inspections.
Gold rebounds above $3,650 ahead of US PPI inflation report.
Yen. Markets assess political developments and BOJ outlook. Scotiabank.
Yeah, boy! Base, how low can you go? Yes, bro! What a brother know. Once again, back is the incredible Ram Animal. The incredible D, public enemy number one. 5-0 said freeze, and I got numb. We're about a minute away. Let me get some kale and coconut down. Unusual indicators that could reveal the state of the economy. Crypto today. Bitcoin reclaims $112,000. Ethereum and XRP midweek rebound. Brazil IPCA inflation came in at 0.11%, above expectations, 0.15% in August.
Investing live European markets wrap. Gold stays bid, currencies muted. US PPI up next.
Euro, chart US dollar, consolidates losses with markets awaiting US inflation figures.
All right, let's get on with it. So we got PPI, Producer Price Index. We got 14 minutes until that's coming out. And like I was saying before, it's just given us a sense of what CPI will be, and CPI will give us a sense of what the FOMC will do. And then it's easy from there. So let's go. Never mad at the fact he's corrupt like a senator. All right, hey. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term and never risk money you cannot afford to lose. My name is Wayne. I will be your guide on this journey we call Forex. Feel free to ask me questions. We could address very specific topics, technically, fundamentally, psychologically, or financially, professionally, whatever. Cool. So let me know how I can help you. I am here to serve. Today we will be using TRADARS.com and TradersWay.com. TradersWay is our prime execution partner. So I use their trading platform. So what you see, I use. And I will build, it's on the list of to-dos, that when you join at traders.com, I will give you all my chart packages and all my custom tools and all my templates and all my indicators and EAs. And so when you join traders.com, you can get yourself a Traders Way account and have everything you see during these live streams. You're like, I want what Wayne has. Well, there you go. TRADARS is my brain. Okay, Traders Way are my eyes. Or I guess my hand. Execution. So anyway, it's good to see you. This is an important day. Not as important as tomorrow. You're like, yeah, what? The ECB meeting tomorrow? No. No, that's so cute. No, not the silly ECB meeting. CPI, baby, CPI. So we had a question earlier in my other live stream that I did inside of TRADARS. One question was, so do we want high PPI or low PPI? We want low PPI. Yeah. In fact, that's yeah, Emerald's is nice headset. You know what? I broke my speaker a day or two ago. I stepped on a cable and whatever. So now it's the only way I can hear. We have a solution for that. We have another execution partner for U.S. residents. So yeah, either way, traders gotcha, man. And in fact, like when you join TRADARS and you trade through us, guess what? We take some of the spread that you pay, okay, and you get it back. So typically what happens is a YouTube guru will work with a broker and they'll earn a commission if they can get you to open up an account and trade. That's I don't earn a commission that way. You know, I've been working with Traders Way for a very, very, very um all right. So how does it work then? Well, this spread rebate is similar like what a guru would get as compensation for pitching the broker. Cool. So we have a program where you trade through us, and that commission, guess what, goes back to you. So instead of Traders Way paying me from the spread, right, from yours, guess what? They just give it back to you in your cash account. Cool. So at the end of every day, you get some cash back. You're welcome. So every trade you make is a little bit cheaper. I also negotiated that you get a little equity boost, but whatever. You're either in or you're out. If you don't see what we do as the most amazing thing, and you don't see it as necessary, I can't help you anyway. So Wayne, everything's in the price. Everything's on the chart. All right, good luck, son. Nelu, if you go to investorbootcamp.com and log in, they're available there. Let's see. Wrong. All right, so you go here, you log in. I haven't done this in a while. Here it is. And you want the MT5, right? Here it is. Install everything for me. MT5, 200 files. Boom. There it is. You see it? Bada bing, bada boom. Go, just go, just. Yeah, I don't sell them anymore because MetaQuotes, aka MT4, MT5, they sued me. They were pissed. I was promoting their platform and whatever, dude. But yeah, so they forced me to stop offering tools for their platform so people will use it. I'm like, well, you, I guess you want people to use TradingView, I guess. Huh? So anyway, it's so funny. But I still have the tools. Yeah, so Bitty over 112 again. All these, everything's nice and flat, ready to go. Oil's back up on the geopolitical tensions going on. Okay, we're a little risk off. Platinum is already up. Russell's down because some people thought 50 basis points was coming on Thursday. Or sorry, next Wednesday. Well, that ain't happening, but uh, but nonetheless, it's a skew. It's a right skew. So yesterday, um, no, actually, it's skewed this way. Still, it's 8.3. Yesterday it was 7.0. So it's actually skewing left, which would suggest on week. What about the October meeting? That's typically not what I send. Yeah, interesting. I wouldn't agree with these guys. So what this is saying is the Fed cuts September, October, December. No, I don't agree with that now based on the information we have. I think the market is wrong. I think we get here, but not till December. So my original, what I said back in January, I believe, sure I did, cut September, no cut October, cut December. Sep and Dees. And so, yep. And then we would be here in October. And then in December, we would be here, is what I'm thinking. But that's why we have news coming out now to help us figure out what's likely. Three minutes. Who's ready? Bum, 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 bum. Cool, huh? You guys excited? Actually, I'm actually excited. So we want a low number, everybody. We want a low number. Low number says, don't worry about inflation, Fed. Don't worry about it. Not a problem. Go ahead and cut interest rates. It's not going to be inflationary because we're not in an inflationary market. Sebastian, I just saw, what am I drinking? It was a drink of kale and spinach, coconuts, carrots, and celery, lemons, limes, mushrooms, raspberries, 1000% vitamin C for the day, and a bunch of other things. Good stuff. 1 minute. Okay, it was 0.9. Now we think 0.3. Well, I don't think we're going to get 0.3. I don't know where they get this number, but okay. I think we're going to get a hot number, but what I think is irrelevant. But I don't see this and say, yeah, it's definitely going to be a low number. Now, will it be as high as last time? Well, I didn't say that, but 0.3? I don't know about that. So if the market's thinking 3, I'm thinking 6. 30 seconds, 30 seconds. So a 6 would be higher than wanted, but lower, and then that gets us really confused, and then we just have more. 18 seconds. Geek posted, doom. You have my doubts. I doubt it. But a high number can still be considered a low number relative to. Oh my God! Oh my, I'm so wrong. Oh my God! Is that a negative number? Oh my God! Oh, we got a Fed cut. Oh, people are going to start betting on this on 50 basis points, which I still think is wrong. But oh, that's so beautiful. You couldn't have. I couldn't have dreamt of a number like that. Like that wasn't even on the radar. Holy smokes! Fed's gonna cut. Dollar's gonna weaken. Dollar is going to weaken. And I missed, you see this trade here? Look at it. I missed it. Yeah, this is Angel and I were talking about this one. And I'm like, yeah, let me show you how to do it. Pop. Well, if I had popped it here and not there, I'd be in it and winning it. Gold, dang it. But anyways, let me get rid of that while I'm coaching. Sometimes I forget. So anyways, we almost got that one. What's the trade plan? Well, dude, we've had this set up for weeks, months almost. So anyways, that's easy peasy. Let's just very quickly take a look at the dollar index. Not the one on your Yahoo Finance. This is my own calculation. Cool. And I would expect this to be down, and it looks like it's down. That's everything is right as rain, y'all. Good. Good, 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 good. So you want to check, for example, maybe some of your exotics that they should benefit from that. Let's go to USD Rand. should benefit. Yeah.
Breaking. U.S. annual PPI inflation drops to 2.6% in August, 3.3% expected. United States Producer Price Index ex Food and Energy, year over year, came in at 2.8% below forecasts, 3.5% in August. United States Producer Price Index ex Food and Energy, MOM, registered at 0.1% below expectations, 0.3% in August.
United States Producer Price Index, year over year, below forecasts 3.3% in August, actual 2.6%. Euro slides against pound as ECB decision looms amid geopolitical tensions.
Bay Street seen opening higher.
Yeah, so far, everything's coming back around. Good. Cool. Let's take a look at how it's impacting commodity futures. Oops. Crypto. Sorry. Beautiful. Stock market should be up. Uh-oh, what do I got going on? Did I get put into an oil short? Yeah, I did. All right, I guess I'm short oil. I'm going to take the other one off. It's dangerous because it's not really jiving with the macro fundamental, but that's a play off of oil fundamental, but without the geopolitic risk that we have now. So, yeah. So, anyways, it's a little bit dangerous. Bitcoin probably up, gold probably up. Let's take a look at gold. Look at that beautiful buy the dip. So, one of the things we talked about yesterday at our 4 p.m. So, at the New York close, every day we do day trading. And the thing that we talked about yesterday is like, this is what you want. I'm a bull on gold. Cool. Look at all the red on it. That's awesome. Look at all the red. Green on the screen. Richard, long Aussie cat. Yeah, okay, I can see that. An Aussie Swissy. Oh yeah, yeah, I can see that. Aussie dollar is probably better today, but I can see that. Maybe drop into a smaller time frame. Yeah. So we should be riding these moving averages, right? That would be the assumption now that this is going to be like this most of the day. And this is going to follow. The assumption would be. Okay. What do you guys think of that? Does that seem about right? The market's so fickle. Now we're going to say, oh my God, are we in recession? And ew, they'll have so much noise in the brain. Oh, the bad news is bad now. It's too bad. Okay, let's revise this and see where we are. I guess maybe this doesn't update until the market opens. Yeah. Yeah, I guess I should hand this out. If you guys want my chart templates, um, Who was asking? Oh, the underscore. Underscore. Yeah, they're right here. MT4, MT5. And it's not just this one, actually. I should have given you a different. I don't know. I guess we'll do this one. Because we also have the complete, which is the other. So you do the basic, and then this used to be like $250, something like that. I can't remember. But now it's more indicators, more EAs, more templates, and more products, right? And so now both of those are. So wasn't it like $50 and then $200? Breaking. U.S. annual PPI inflation declines to 2.6% in August versus 3.3% expected. So anyways, that's where you get that stuff. And then the idea is I'll move that over to traders.com. So keep your eye on the skew here. I think this is going to skew left quite a bit, and that should bring dollar weakness. Now, maybe I'm wrong on the dollar weakness. Well, in that case, you should see the skew change the other way. I don't think that's likely, but I don't know. But if it skews, if this goes up and this goes down, okay, dollar weakens. That's just what it is. So you want to keep your eye on that. And that's, again, a cool way to measure what's actually going on. Not what you think, not what you feel, not what you like. Okay? What you can prove. That's what we do. So look at the ball here. You better know what you want to do. So for example, S&P 500 up. That's what I want to do. That is what I am doing. So what if today's down? What if the vol's down? What does that have to do with me? I'm a buyer, so if it's down, I'll look for places to buy it. Lexio! Yeah. Wow. Very cool stuff, man. This is good. Too many people talking gold. Well, the issue, and today's news is actually probably not good for gold. So one of the things I've been talking about with gold is if GDP, GDP falls, and I don't think we can maintain 3.3. So I'm kind of guessing in the future it's low. And what I was guessing is CPI would be higher. At some point, if GDP becomes lower than CPI, because it drops, let's say, from 3.3 to 2. So let's put it this way: if CPI goes up to, let's say, 3.3, we'll reverse everything, and GDP falls to, I can't GDP. I can't do two things at once. It's just so CPI 3.3, GDP 2.3. Okay, XAU up. XAU. So what we found out is CPI might not go up that much. So what if this stays at 2.9? Let's say, not 3. And GDP drops there, then it's just less up. But the shock of disinflation, deflation. We actually went to deflation. Disinflation is when you drop from 3% down to 2.5. Okay, you still have inflation. You have 2.5% inflation, but it's less than 3, so you have disinflation. Deflation is prices went down. Now, if I were to guess, and nobody likes it, you should never be guessing, but if I guess our plus 9 last month was just simply wrong, and our negative 1 is also probably wrong, and we're probably sitting somewhere in the middle at 4.5. I think we're more like in the middle. But nobody cares what I think. Oil prices up after Israeli attacks, but oversupply caps gains.
Breaking news. U.S. core PPI rises by 2.8% YY in August versus 3.5% expected.
Swiss National Bank chair says U.S. dollar remains dominant currency. Okay, we got it. U.S. annual PPI inflation declines to 2.6% in August versus 3.3% expected.
Breaking. U.S. annual PPI inflation drops to 2.6% in August, 3.3% expected. United States Producer Price Index ex Food and Energy, year over year, came in at 2.8% below forecasts, 3.5% in August.
Oil prices up after Israeli attacks, but oversupply caps gains.
United States Producer Price Index ex Food and Energy, MOM, registered at 0.1% below expectations, 0.3% in August.
United States Producer Price Index, year over year, below forecasts 3.3% in August, actual 2.6%.
Breaking news. U.S. core PPI rises by 2.8% YY in August versus 3.5% expected.
Euro slides against pound as ECB decision looms amid geopolitical tensions.
Bay Street seen opening higher.
Swiss National Bank chair says U.S. dollar remains dominant currency. All right, that's a lot of headlines, but at the 15 and the 45, so it must be 8:45, we get updates. So that was the update of all the news headlines that came out recently. And a lot of them were related to PPI. So anyways, if we're doing like year over year analysis here, we're at 3.3 GDP, which is quarter over the quarterly GDP year over year real. Yeah, it's very specific. Okay, GDP, and now PPI, not CPI. PPI, which is just one measure of inflation, is 2.6. So that's good. GDP is higher than PPI. The United States has positively growing standard of living. Okay. Now, this is probably heavily influenced by gasoline and oil prices and transportation costs and all that kind of stuff. But it is what it is, and that's good. And I am a bear on oil. I do think we're going to drop a lot. But this allows the Fed to cut. Now, we're assuming this is going to show up also in CPI, because what we really care about is CPI, and then what we really, really care about is PCE. But right now, inflation is lower than productivity. You don't need to own gold. What are you hedging? Inflation. Well, GDP is higher than this reading. Tomorrow, CPI, that's what we care about, but what the Fed cares about is PCE. So we got many measures. But nonetheless, this is where we are now. Do you need to own gold? No. Do you think that's why somebody sold right here? Yeah. Depends if you're a bull or a bear. But that's one logic. But tomorrow, if CPI comes out high, CPI comes out high, I don't know, higher than 2.6, then people will probably buy this back. So if you're a bull, you want to start thinking of where you're going to buy it back. Okay? You don't know what time, you only know what price. I'm not telling you to be a bull. That's not bullish. Here's, the pattern here is this. Wait, wait, that's bullish. There we go. That's the pattern. Okay. So bears are going to want to take it down. That shows the slope in the standard deviation. Oh, so gold is a hedge against systemic risk. It can be. Now, lots of people use it to hedge inflation. But in risk in general, sure. But what risk? The risk of what? We have a 3.3 GDP and falling inflation. In fact, month over month, negative inflation, deflation. What risk are you hedging? What risk? There's no risk. That's right. That's what it looks like there. So you don't need gold. Oil's just doing oil, so don't worry about oil. So really what it's come down to is the
Wall
stock
Street
market.
might open broadly up. U.S. producer prices unexpectedly edged down 0.1% in August.
Okay, so here's the plan we've had for a very long time on the stock market. Okay. And yeah, we had the big drop to the 786, and then what? Up, up. So it dropped. Now we're doing both price and time analysis here. So there are 2 times in the month of this particular month in which you want to buy, and it's somewhere around here, and really it can be more like somewhere around here. Okay, at least somewhere in between those windows, right? And so what we got is a double bottom, and then this. So there's the moving averages that we're riding. So this whole zone is a buy zone. Cool. Our annual target for NASDAQ. What did we have as a target on the first day of the year? This price here, 24,500. That was the assumption. January 1st. 24,000. We're only 500, and we're only at 23,970. So we're probably going to tickle 24,000. 25,000 is our best case scenario. But we've been a bull all year. And in fact, even this down move we predicted based on our analysis, not predicted. Like, we analyzed the market. We knew down would happen. We didn't know how fast or how far, but we definitely knew it was going to happen. And then the idea is then you buy it, and then we target here. Now, it went a little lower than I would have liked and a little faster, but the plan never came. Okay. Then we go to Dow. Okay. There's our plan. Okay. This was done last week. I guess this is our swing trade, huh? So when we did the swing trade last Thursday, price was nothing but red candle, red candle, red candle. So we said, yeah, I guess we'll buy it. And our target would be up here. And so far, so good. Now, I don't have the target here. This is just the price action, right? I don't have the target. And for that, I'd use monthly and annual pivot points. And then this is weekly with monthly pivot points. And the S&P 500 on the daily chart is right as rain. Look at this, how straightforward it is. Up, 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 down, down to the moving averages. Buy. Up, 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 down, down, 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 buy. And we're just moving along. Okay. According to what I have been teaching for decades, and in fact, even in my book from decades ago, from about the middle of May, you've been a bull. Now, that's on the daily chart. If you use seasonality, okay, I said it before this drop, and I said it the year before, and 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 the year before, whatever. This is just totally normal. Somewhere between the middle of March 15th, and April 5th. I'm a buyer of the stock. Does anybody know this to be the truth? Somewhere in that window. How many people confirm that I'm ready, willing, and able in that window to buy the stock? In fact, saving money and managing the portfolio for the down move so that I can benefit from the up move. Anybody confirm? Yeah. If I remember correctly, right, in this Council of Investment Advisors, I think we took some profit sort of in this zone. Was it? Was it NASDAQ? We stayed in Dow, I think, because we felt like it would have the least amount of volatility. And I think we took some out of NASDAQ because it would have the most amount. I think that was true. And then I had the cash to buy back. So anyway, so this is, yeah, so people are confirming. Cool. So here we are now, and we're rolling. I have an opinion of how long to be in this trade, not just the price, but the time. The same thing of price and time. Okay, price and time, that this is coming. I don't know to what how far to fall. It's time analysis. I know it's time to take some profit. I know it's time to start hedging. I just don't know what's going to happen. And then somewhere in here, so I don't know if I should buy this or if I should buy this or I should buy this. So it's not easy. But I know somewhere in here is the prime time to look for opportunity. Craig wants to know about Aussie yen. Sorry, I just noticed that, Craig. Well, that issue of the gap is not a technical issue. It's the Prime Minister of Japan having to step down. Now, we've known about this for a while, but it came to a head where, yeah, he's going to have to do it because he was going to fight it, not do it, and a bunch of other things. But we learned, so is the gap going to fill? Well, that's the theory. And technically it should, but fundamentally it doesn't have to. Because that's not fundamental, right? That's geopolitical, right? And so I don't know. It's hard to say. Why don't we look at it? But it's not going to be on a chart. Even though we're going to look at it, it's not going to be on a chart. The true answer. But wrong one. You said Aussie? Aussie yet? Aussie. Really? Smokes, eh? Let me go to the other one. Well, I guess we already. What? I'm probably too far out. Oh, I would even consider that as have already filled. So you're like, is it coming back down to here? No. So there's two things I should say about this. Okay. Yeah, it did that. So even before all of this happened, what would I have said last week? The economic data in Australia has been improving the last several months. I know it because I read the economic reports every week. Every week. And I'm aware that things are improving in Australia. Second, if you could travel through the past to talk with Wayne every year for 20 years, I'm very interested in buying Aussie yen now. So I know if you had talked to me last week, I'm like, well, Aussie is, really improving. It's had quite a run. Then you're like, well, do you think it's gone too far? And I'm like, well, you know what? If I could get into a trade and jam my stop, I would hold it for 12 weeks. Okay. So it did a 618. Well, I don't use Fibonacci. Fibonacci's for losers. I use Wayne-Nachi. I used it. That's a 66. Yeah. Okay. Even better. 50%. So what? And that's not a Fibonacci number either. So, boom. Anyways, long gone. And I could back all of that up with data, not sort of backfilling opinion like, yeah, I love it now, Craig, because it's up. Of course I'd buy it. No. I could back this up. We could probably even watch videos from 10 years ago on YouTube showing me that I'm bullish Aussie yen. So, oh, so yeah, I would consider that a gap fill. Yeah. Well, your window is 12-12 or 1-1. Gold clings to gains as soft U.S. PPI cements Fed cut bets.
Euro US dollar price forecast. Firmer US dollar after encouraging inflation data.
U.S. stocks may see further upside following encouraging inflation data. Portugal, inflation confirmed at 2.8%.
China's retaliatory tariffs to squeeze EU pork producers.
Ooh. Yeah. European pork producers are going to be squeezed. That's hot. That's so sexy. Come here, pork producer. I want to squeeze you. Oh, 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 oh. What does this suggest? Risk on. Risk on dollar weakness. It's not my opinion. I'm not guessing. I'm not telling you what I think. By analyzing the Fed funds futures market and the midpoint price in which these trillions of dollars are being negotiated, quantitatively speaking, our skew shifted to the left. And because of that, it's very, very, very likely the market is risk on and therefore US dollar weakens. That's not my opinion. That's the math. So we go back to the indices, and I would assume dollar weakness on the indices. And if it's not happening, then you should be careful and wait for it to happen. So we're on a 5-minute chart, so we had weakness, then we had a pullback. So what you should be analyzing is, will the USD now, okay, we had the vol. The news event is the vol. What is volatility? Volatility is a high standard deviation. Is high standard deviation good? No. Now, we got past the reaction. A lower year over year, negative month over month. So now what are we doing? Is the dollar going to weaken? That's how you trade. Anurag, right on. India. I'm due to get back to India. I want to do southern India, actually. I've done a lot of northern India. Southern India. I'd also probably need to swing by like Bangladesh. So that should be a whole like Bangladesh, Nepal, uh, eastern India, and then all the way down to southern India. Oh my God. Can you imagine? Road trip. Do it by motorcycle. Oh my God. I would never drive across India in a motorcycle. But yeah, but if I did, maybe I'd stop by and say hi. We're going to Anurag's. Yeah. So, anyways, this is what we're doing here. We're using the Fed funds futures market, analyzing the midpoint price, changes in midpoint price over time, correlating that to other markets such as. So I look at this. This is what I see. You ready? Like the oracle on the matrix, right? What do I see here? Stock market up, dollar down, euro dollar up. Now, normally I would say gold up, but that's a whole different thing now. Yeah. Oh, I don't have any plans to get to India, but I have a couple of people working for me in Bangladesh, and super nice guys, stuff like that. They don't know each other, just happen to be that way. And so it's like, oh, so maybe I open an office in Bangladesh. I'm looking at Egypt as well, so I can have one team in Bangladesh, one team in Egypt, and have two time zones going. So, anyways, I can swing by because I'd like to see Nepal, and I'd like to see Bangladesh, and I haven't seen Eastern India, so I'm like, maybe I can put all that together, right? But one advice to people visiting India: if you're going to go from one city to another, fly. Yeah, I did both, flying and driving, and oh my god, on
Two
on,
AI
on a
tokens
rock,
to watch as
scariest
BankX
thing I've
launches
ever
AI
done was
crypto strategist.
being
US
driven in
dollar
India
wobbles on
at night.
PPI. Stock markets stay higher.
Nighttime driving. Yeah, look it kind of looks like it's trying. Me, 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 me. Me, 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 me. The Punjab and Rajasthan, Delhi, Agra, and there are some beautiful places in India and fantastic food. So cool, right? Agra, Delhi, Chandigarh, all quite different, but incredible. So that dollar is weakening on the fiver. That's exactly what we want. Euro looks like a dog with fleas. So we can go back to our go back to our exotics. Uh, 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 uh. Oh, you're from Rajasthan, Jaipur. Yeah, yeah, Jaipur is nice. I like that. Yeah. So we wanted to look at this. So one assumption is this should benefit from the scenario. So I'm going to go ahead and lock in. Am I going to lock in? Did I lock in? Why not? Let's lock. I'm going to lock in 9,000 pips. Yeah, Anurag, I stayed at the uh, what's the big fancy hotel there? Boy, they were cool. What the big, big, big old fancy hotel? Jaipur. The Taj. I think it's the Taj. Oh man, we had such a good time. They were it was such a great hotel. They were so good. We had such a great experience. Yeah, I was thinking of all the different stories of that hotel. I remember, so I wanted to smoke a Cuban cigar that I'd bought uh, on the way to India. I think it was in London or wherever it was. And so I'm like, oh, I'm going to smoke this here. And they're like, sir, well, you can't smoke on the grounds. The peacocks don't like it. The peacocks, whatever. I said, well, where can I smoke my cigar? And they're like, you can smoke at the circular driveway where people get out of their cars. Like maybe that would bother them, but now you got to worry about the peacock. So I said, well, that I don't want to like smoking essentially parking. No, it's where the cars come in and people guests unload and go into the hotel. So it's still nice, but I'm like, it's not cool. I said, no, I don't know. And they're like, well, sorry, this area in the front of the hotel is the only area that we. And I said, can I go up on the roof? And they're like, the roof? And I said, yeah, like if this is the only area, and of course, covering the stairs up onto the hotel, they have I don't know what to call it, but cover, solid part of the building roof, um, but it's just pillars holding up this thing that sticks out of the hotel. Beautiful. And I'm like, well, what about up on that? And they're like, up there? I said, they're like, there's it's just nothing up there. I'm like, well, I'll tell you what, set up a table and chairs up on that. Like, how would you get it out there? Through the window. Okay. This is what they said. Okay. So they set tables and chairs up there on the roof overlooking the circular driveway and the fountain and all the beautiful
PPI
flowers.
data, but bouncing higher.
And I'm like, dude, this place rocks. They're like, okay. What do you mean, okay? That's absurd. They're like, whatever, bro. Anything for the Wayne. So, yeah, Skype forward. So, anyway, cool. All right. So lower lower interest rates in the United States. Let's thread this together, and then I'll let you go. Lower interest rates in the United States would benefit South Africa and Mexico because they borrow a lot of money. And because the United States is the reserve currency, a lot of it is in dollars. Some of it's in euro, but some of it's in dollars. But they have a lot of debt. So think of it as a mortgage on your house. Well, if the Fed is going to cut and continue to cut over the next 6 to 9 to 12 months, then every month your mortgage is going to get cheaper. How does that benefit you? Positive cash flow, improved return on investment, or your ability to pay down the debt faster, but your servicing cost goes down. And this happens in real estate where this is part of your calculation of what is your debt service cost. What is your mortgage? Well, if every month it gets a little cheaper, then this is going to be a good year because your rent is probably going to be about the same. But if your mortgage is getting cheaper and cheaper, your return on investment is getting higher and higher. So this is good for South Africa. Okay, now I'm shorting on euro because it's got the highest swap. Because if it's good for South Africa, the rand is going to benefit against everything. But euro also, I'm borrowing money from Europe and it only costs me 2%. And then I'm lending it to South Africa and earning 10%. So my carry is 8. That's why they call it carry. Sweet. Now, if I do it against dollar, well, my cost is 4.5. So the carry is significantly less. But if this gets cheaper, then the carry increases. And so down is probably the way to go. And so you're probably going to be measuring this, looking for lower low, lower high, and then you sell it and you never get out. Jam your stop at break even. Yeah, boy! That just happened. Thank you for your time.